Welcome to the FX Trading for Newbies section. This is one of the definitive sections to the cornerstone of your success in financial markets trading, and it really will uncover the very basics and answer those questions you're probably asking from the outset, the very basics in currency trading or any market for that matter. Okay, so whether you're new to trading or completely new to trading, we thoroughly recommend that you go through this section first, over and above any strategies, risk management or trading psychology, because it will set the foundations in place. So how do markets work, first and foremost? Well, just like any market where physical goods and services are exchanged between buyers and sellers, in a financial market, buyers and sellers are meeting to buy and sell financial asset classes such as currencies, stocks, indices, commodities, you name it. It's a place where buyers and sellers can meet and exchange the assets for what is perceived to be the best possible price. And of course, on the flip side, for sellers, they look to sell the asset class at the best possible price. So essentially, the buyers can look to buy for the lowest possible price, and the sellers can sell for the highest possible price. And this, whatever the market price is at the time of being published, is essentially seen as the market price. So as a trader, we decide if we would like to buy and sell. What looks cheap, what looks overbought, what looks oversold, where there's value. And the broker is the middleman who we place our trades with, and he is essentially intermediary, linking both buyer and seller. The broker takes a small cut of every transaction we place in exchange for arranging the service. This is known as a fee, or as traders, we generally pay a spread, and we can really view the broker as somebody like the eBay or the Amazon for introducing buyers and sellers within the marketplace online, in our case. Now, thanks to the advancement of technology, we really can place all of our trades in our brokerage account, which we can get providing we have internet access, and this really is a far cry to the pits of the 1980s and 90s in Chicago, where it was more of an open outcry. So we can do it this way. It's as if we're buying and holding. But as whether we're trading the markets, I have an opinion as to whether markets are going to go up or go down and make money from whether markets go up or go down. We can essentially arrange our trading exactly the same way as if we were just simply doing the traditional route via our brokerage account, where we're just buying and holding stocks for the long term. So foreign exchange is one of the most liquid markets in the entire world. $4.5 trillion are traded on a daily basis. This is only really rivaled by the bond market. This completely trounces stocks, and it means where we have a very liquid market like the foreign exchange market, it means that the broker can always find a buyer or a seller to match the other side of our trade very easily and very quickly. And this is fantastic if we want to get in and out of a trade quickly. This is the case if the broker is direct market access, which means that he will essentially marry up our trade with somebody with an opposing view of us. Of course, you get brokers who will take the other sides of our trades, who have a B book, for example, where they're essentially doing the opposite of what we're doing. These are certainly more of the more retail traders out there, smaller brokerage houses. And it's true what they say. The brokers will watch our accounts, and if we're making consistent profits, they will copy our trades. Whereas if we're making consistent losses, for example, if you're just guessing or punting like lots of amateurs do who don't bother to seek education, then they'll just do the opposite of our trades. So the broker really does have a very good position where they can just simply copy our winning trades and make money from taking the other side of our losing trades. So the broker really has a real sweet spot. So you do get markets which aren't particularly liquid or have very low trading volume. They're very difficult to trade, unlike the currency markets, because there is gapping, and if we want to get out of, for example, a stock which has very thin volumes, it means that it's unlikely that we'll be able to find somebody the other side of our trade who wants to buy the asset class off us if it's a very thinly traded asset class, then we're stuck. Of course, this wouldn't happen in the world of trading Forex or bonds, for example, which are highly liquid and volatile markets. That's a great thing about trading Forex over and above, for example, AIM listed stocks or these very, very small stocks on these exchanges where it's not always the case where we can find somebody to take the other side of our trades. With currencies and bonds, they generally is somebody the other side of our trade, and if there isn't, then the broker will take it instead.
What do you think of that? Trading does not have to be difficult or time consuming. In fact, all you need to become a profitable lazy trader is a single strategy which you can trade for only minutes a day. Visit thelazytrader.com and download for free 5 rapid ways to become highly profitable at Forex trading and your trade secret video pack, so that you can copy the winning elite and rapidly accelerate your long-term success in financial markets trading. Trade profitably from as little as minutes a day and beat the banks and brokers at their own game. This is available for a limited time, so download it today. www.thelazytrader.com. It's free, fun, and most importantly, it will help you. Visit thelazytrader.com.